Today on the show, I have the pleasure of speaking with Ashlee Cabeal. Ashlee is the CFO of Hamilton Zanze, a real estate investment firm with a portfolio of over $4.3 billion. That's right, a B with billion with a B that specializes in multifamily investments across the United States. The company is one of the nation's largest privately held multifamily syndication company with over 20,000 apartment units under management. Ashlee started her career as an intern in a very much male-dominated world of real estate investing over 10 years ago. She's a public certified accountant, a CFO, expert in 1031 tax exchange program, and Ashlee is passionate about championing young women in the business, particularly in industries where women are underrepresented. I'm really pumped and excited to have her on the show today with me to share her incredible experience and her insight. G'day, Ashlee. Welcome to the show. How are you doing today?
Great, thanks. Thanks for having me.
My pleasure. My pleasure. Well, I really enjoyed the intro there and having female entrepreneurs on the show. I know I've talked to a handful of them over my time of doing this podcast, and as we said a little bit in the green room, it is a very much male-dominated industry, and I'd love to get into that and how you've created your path in this industry. But before we do, can you rewind the clock and tell me how you made your first ever dollar as a kid?
Yeah, so it was probably going to my dad's office in San Francisco. He was an accountant and then started doing real estate investing and doing odds and ends office tasks. So whether that be filing, making copies, shredding, just having a small glimpse into what it's like to work in an office, I'd say that's how I made my first dollar. So granted, it did come from my dad, but I was still working for it. So.
And did I hear you said he was also in the taxation field?
Yeah, so he was, he started his career with the IRS and then he went into public accounting and then he went into private practice and then he kind of ended his career doing his own real estate investment and having his own family portropolio that he managed. So awesome. Very similar path, I'd say.
Very similar path.
Yeah.
A very similar path. So then bring us forward, walk us through the journey and vulnerability is always best on this show. People love that sort of stuff. How have you gone to create your path in very much a male dominated world, as I mentioned in the intro?
Yeah. So like you said, I started at Hamilton Zanze as an intern in 2010. And I started the job not knowing a thing about real estate. Didn't know what a cap rate was. Couldn't tell you anything about real estate. I did understand a balance sheet and an income statement from being a CPA and going back to school and all that stuff. And I went back to grad school during the Great Recession, not knowing what I wanted to do. I grew up in Silicon Valley. I thought I was going to go work in private equity or venture capital and do something exciting like that. And while I was looking for my internship, my dad said, why don't you try real estate? Just take a summer, learn about it. Your family's invested in it. It'd be good for you to understand real estate. And I was like, no, I don't want to do real estate. But I went in and I met with Kurt, who's our CIO and one of the principals, and, thought, why not? I get to stay in San Francisco for the summer and learn about real estate. And obviously something stuck, right? And when I started Hamilton Zanze, it was a lot smaller than it is now. There was only about 20 employees. We got to wear a lot of hats. And, through my first 2.5 months there, I loved it. Real estate is tangible. It's real. You can see it. You can touch it. And so it all clicked for me. And I stayed on through my second year of grad school, graduated early, and then started my full-time job. And I put my head down and I wanted to learn as much as I could, as fast as I could. I took every opportunity I could to figure out what HC was doing and to understand the structure of our deals. Asked a lot of questions, and I wasn't afraid to ask the questions and raise my hand. And it's tough. It's intimidating sometimes in those rooms to ask a question, right? And you're afraid it's a dumb question, or you're afraid someone's going to judge you for it. But I think there's something inside majority of the people who work in real estate that they want to teach, right? And so if you're willing to listen and kind of watch and observe how things are working, I think you can learn a lot. The first office that I worked in within Hamilton and Zanze, majority of our office space is kind of open space, right? So a lot of us are sitting in a room together. And I was sitting in a room with Kurt Cooper, our CIO, and 3 other of us that just started, and just listening to him on the phone calls, talk to brokers or talk to lenders. You you pick up so much stuff. So I think the willingness to ask the questions and truly listen, I think is really important. And there were times where, I felt the feels of being a female in the room. And I wouldn't say necessarily at Hamilton Zanze, but, outside of our company, I would feel it. But, I think you just almost not kill them with kindness, but, just say, hey, I'm trying to learn and trying to understand. And I have some questions for you if you have time for me. And you just, you prove yourself as you continue to work hard and demonstrate your skills.
That's awesome. That's an incredible story and something that is, really, I don't know if it's not heard of. I'm a millennial. I don't know if that's going to say my age, but I feel like a lot of younger people jump around jobs trying to figure themselves out. Was that jump from your CPA world, was that jumping around and you just landed, you just got lucky and you landed in a place that you really, really loved and obviously absorbed as much as you could?
Yeah. So I started out of college at PricewaterhouseCoopers, so big audit firm. I started in the banking industry. And what I learned there is, one, I didn't want to be in public accounting, even though it's great and you get a great base. But I really liked the teaming at PwC. So even though it's a large company, you're on smaller, more focused teams. You get to know your managers, your senior managers, your partners. And I knew that about myself, that I liked kind of that smaller environment where you really get to know people and, form a team. And so when I started at Hamilton and Zanze, it was, to be honest, it was my second job ever, really, truly, going from PwC to school to Hamilton and Zanze. So I don't know what it's like to jump around, right? But I know what it's like within Hamilton Zanze to jump around different departments and work with different. But I think for me, it was really important to work in a place that ultimately became like my family, right? Like I've gotten married and had kids and all of that stuff I got to share with the people that I work with at Hamilton and Zanze. And I think the thing about the company is that we truly care about each other, but we also care about our investors and our investments and our residents, right? And there's something there that keeps me at Hamilton and Zanze and keeps me happy. And there's continuous learning too, which I think a lot of times people jump around because they may get stagnant, right? And they're stuck in that position. And I completely get that, because if I wasn't continuing to learn and there wasn't exciting stuff to work on, I probably would have made some changes. But every real estate deal is different, right? You can say, oh, this one's going to be a plain vanilla deal, but you know what? They never turn out to be that way. And when you close that deal, put a bow around it, it's probably one of the best feelings. So
yeah, no, that's exactly right. It's addictive, right?
Yeah, it is. It is.
Tell me about the growth. Like you said, I think you entered Hamilton Zanze at 2010. So you were an intern. Where were they at that stage, and how has your progression in your career into now becoming the CFO, which of a 20,000 unit portfolio, $4.3 billion under management, like that's huge. How's the company grown? And then parallel, how did you grow to take to that position? Because it is a very, very influential position in an organization which has so much assets under management.
Yeah. So when I started the company, there were 20 people working, all for the same motivation of investing our friends and family's capital in value add real estate. And so I think at the time I've joined, there was probably 7,000 units under management. Again, coming out of the Great Recession. So they had a couple of years that were slow buying years, right? They weren't buying a ton of deals. And then 2010, 11 started to pick up and our acquisition pipeline picked up. And so we also, when I'd say 2013, 14, 15 kind of came along, we were also repositioning our portfolio. So we had kind of figured out, we had grown, we had gotten scale, kind of understood what type of property worked best for us. What were those metrics? We throw around 200 plus units is best for us, right? Just giving us that size property is better for us. We operate that better. We like $1,000 in EGI per unit, right? We like 1980s or newer. So piecing together those facts kind of helped us reposition our portfolio, right? So selling smaller properties that were maybe older, that were just not producing the cash flow that we were looking for, the returns that we were looking for. So there was growth and ramping up of just buying properties in general, and then also repositioning our portfolio to kind of bigger and better. I mean, we had a lot of debt maturity that was coming due, and we did a lot of buying in 2005, 2006, 2007 before everything kind of seized up, so that we use a lot of 10-year debt. So we had a big wall of debt maturity staring at us in the face that we had to reposition our assets, buy newer stuff, close on our 1031 exchanges. A lot of our structure is 1031 exchanges. So that's kind of our growth pattern. And at the same time, we were working with institutional partners and buying one-off deals and just growing our platform and increasing our recurring revenue through asset management fees. That was a big deal for us, is the more units under management, the more recurring fees we have, and we can continue to grow. Paralleling my career growth on that path, so started as an intern. When I took my full-time job, I was working in transactions, asset management, and a little bit of the finance department, just helping with some of the corporate books. As we grew, we kind of had to make the decision of what do you want to be? Like, where do you want to go? What do you want to do? You can't do all of this stuff, but I'd say doing all of that stuff taught me a lot, right? I understood the asset management side of it. I understood our corporate side of it. And obviously I went to transactions because I love it and I was passionate about it. And there's just something about doing deals that, lit a fire in me. So I spent, 8 or 9 years just solely focusing on transactions, whether it be acquisitions, refinances, transactions, or dispositions. And then in 2019, when our previous CFO left, it kind of fit, and it was an exciting opportunity. And I think goes back to the theme of continuing to learn. It was a hard decision though. It was tough. It was an internal conflict, because I love the transactions. I love the relationships I built, with lenders and brokers out in the market and other sellers and buyers. Like meeting people across the table when you're buying and selling a deal is always nice to meet those people and continue to do transactions with them in the future. So a lot of internal conflict, in making that decision, but ultimately I did it. I took the job, but I kept a piece of transactions with the closing group with me, so we can see the closings. But that was kind of my path, and so it's been a fun journey.
And growing from 7,000 units to 20,000 units, how's the company changed? Because you talk about culture early on and being in there and rolling your sleeves up and everyone's getting dirty, the hands dirty, you're sort of wearing different hats. And that's, how we are in our company, and we're only 4 or 5 people, we're a lot smaller than you guys. But how does that transition to then being, because you never want to get the fear of being pigeonholed, right? Like you are now just this, right? And that's all you do. You're just the cog in this piece of this huge machine. So how does that keep evolving when you get to 20,000 units and over $4 billion in assets?
Yeah, so there's definitely now, much more defined departments, right? We have an asset management team and we have an investor relations team. But I think the way that we keep that kind of grinding, in the details is that, we're still pretty small relative. We're just around 50 employees. We all know each other really well. We have family meetings when we're not in this COVID environment where we're all together talking about stuff. I think the water cooler talk is really important at Hamilton and Zanze. You find out a lot about what's going on in terms of deals, right? And we're an open book. If you're in accounting and you want to know what's going on in transactions, come to the transaction meeting, right? And everything in a real estate company like ours, everything plays off of each other, right? You're not working in a silo. The investor relations group is selling the equity in the deal that the acquisition group is buying, and the asset management group is help determining the business plan along with the construction management group. So there's a lot of interplay within the office, figuring out how to get the deal done because there's so many pieces that you need to put together. So it's a lot of collaborative work. We like to travel together. We like to go see the real estate together. And I think, also if you're interested, ask. And we're not going to say, no, you're in IR. You can't, go on an acquisition due diligence trip, because that's hindering your growth, right? I feel like it makes you a better investor relations person if you see the real estate and you understand what we're buying. And I think seeing the properties and understanding how it all fits together is a big part of real estate, and understanding and being successful at whatever kind of career you have in real estate.
100%. I can completely agree. And I think having that, coming from that lens on my side of the fence, where it's, me and two other partners and we're doing everything right. Like it's just, and our investors, like, we want to come see the property. All right, well, who's going to go walk it with them? Right. And then I'm doing the construction management and the asset management. And so just trying to do everything together. But then as you grow, keeping that, I don't want to say grassroots, but a feel that you can have access to everything, and you need to, because as you just mentioned, the culture within HZ will be that everyone understands each piece and each function, and helps their individual skill set grow, whether it be attracting capital or debt or asset management or construction management. It all you understand the bigger picture. And I think so many people, we talked about ceilings before and jumping around, they don't ever get that look into, well, where are we going? Where's this ship sailing to? And if you never have those conversations with even people who are lower down the totem pole, they just don't feel like it's worthy, right? Like so I think having that culture of openness and, hey, you want to come and get on site, let's go, because it needs to be from a growth point of view. Tell me a little bit about how the acquisition strategy has changed over the years now that you've grown so quickly. I love what you said before, the EGI of $1,000. I remember when I first went to Texas and started buying assets and Class C assets, right? Like $650, $700 was the average rent. Now it's $1,200, it's grown. So what are you guys doing, and where are you buying? And I know you're across the country. So what do you like right now?
Yeah. So we like value add returns. I'd say that. And it doesn't have to be necessarily in the value add space. Sometimes we're finding value add returns in the core plus space, new construction, or we see management as kind of, we think we can do it better in terms of management, right? Sure. So wherever we can find those value add returns, we're kind of chasing. And if you put metrics around it, we like 30 years or newer, right? I know I said 1980s, but ultimately we would love it if the asset's no older than 30. There's always exceptions to the rule, right? So, but I had to put something around it. 1980s or 1990s or newer, 200 plus units, good EGI, infill location. So kind of all those things that everyone's looking for, right? We know how competitive it is right now. There's so much money in the market. Doesn't feel like there's a lot of supply. So where we've seen, a lot of our success in the past couple of years is quasi off-market transactions, right? So we have really good relationships with sellers out there and brokers, and say a deal falls out of contract, maybe we'll get the next look because we're going to close on the deal. So we're chasing yields. We've moved out east. We've moved to the Midwest. Once we land in a spot, we like to grow our portfolio within that spot. 2,000 to 3,000 units is kind of that sweet spot, especially with, our partners started a management company back in 2012, right? So to have the economies of scale in that market is really helpful. Owning one asset somewhere is not as efficient for us as our asset managers are traveling and regional managers and whatnot. But we love real estate. We love projects. We have a construction management team that'll come in and establish a business plan for us and help us improve the property. And so we're all over the place right now. I wish I could say we're focused on one market, but we're kind of everywhere at this point.
What markets are you in? Just higher level.
Yeah. So when Hamilton Zanze first started, we were primarily West Coast. We're based in California, but we own no multifamily in California. So starting up top, we have Washington, Oregon, Phoenix, Texas, Nevada, Idaho. That was kind of our initial base at first. 2016, we made a jump to the Eastern Seaboard, and we purchased a portfolio of properties in 2016 out there. And so that was kind of our first jump to the Eastern Seaboard. And then we kind of traveled up. So we are in Virginia, Connecticut. We just, grew a portfolio or purchased properties in Nashville, Tennessee now. We're in Kansas. We're in St. Louis. So kind of all over. We're not in Florida yet. We're looking at Florida, but we haven't made the jump there. But it's kind of like a little smile if you had to do the United States. But so we are in, 15 states and 27 MSAs.
Wow. That's incredible. And that's a take your hat off. It's sort of, we all aspire to be that one day. Well, maybe we don't.
It's been fun. It's been fun. It's been a lot of work and challenging, but it's been really fun. You meet so many great people along the way, and people who champion, Hamilton Zanze to continue to grow their portfolio.
And now, as we transition into, you've seen it from the coalface, right? You've been in early in the stage of after the recession. You could see you're in the trenches with Hamilton Zanze when they're buying straight after 2008, 2009. Where do you think these prices are going? Like, how much more can cap rates compress in some of these secondary, tertiary markets? Because obviously you have a lot more data. I'm just in Texas, right? I'm in 2 markets in Texas, but what are you seeing nationwide? And like, is it just the rent growth story? You have to believe in that, and that's all you can believe in, or do you think cap rates will continue to compress even further?
I think there's a couple of things at play. One, financing is really inexpensive right now, right? And as long as that is keeping up with that cap rate compression, which it is right now, people are going to continue to buy. I think also we're at a really good spot in terms of people need homes, right? And the construction pipeline and supply has not kept up, during these past years of apartment growth. So that is why you are seeing, such a compression on cap rates. And I feel you're going to continue to see that because the demand for housing is continuing to grow, and our delivery of housing has not kept up with that.
Got it. And do you ever see
is very strong?
Do you ever see a swing back if say financing SHIT's the bed?
Yeah.
You start to get interest rates that expanding, and obviously cap rates are a function of that. Do you see it going back the other way, or back in the day, you're buying things at 6, 7, 8 caps? Back in 2012.
Yeah. I was going to say, now where are you finding those? Can you get
No. That's what I say, back in the day. That's where it's come from.
Yeah, for sure. Yes. I see it changing, but at the same time, I think in the multifamily market, you're buying an established stream of income, right? Like there are rents coming in and there is money. It's developed. It's there. There's no risk. There's no development risk. There's nothing. You're buying a stream of income. It's proven, right? So I think no matter, even if interest rates go up, you're still going to have a pent up demand for multifamily. So yes, cap rates may go up slightly, but I don't see the days of 6, 7 cap rates coming back anytime soon.
Is that because of historically real estate's been an alternative asset, and you've seen a lot more bigger players, the Wall Street's types coming into this space? Does that have anything to do with it?
For sure. You see, I feel we see new players every day, right? If you asked me 6 years ago, if I knew the types of groups that would be bidding on our assets that we were selling, or how many groups we're competing with on the buy side, I could probably name most of the groups that we would see, right? Now there's just new groups every time that we're meeting, and there's just so much money. I think, especially multifamily, which has been the sweetheart for many years. I know, industrial is probably taking that over a little bit right now, but it's a really stable asset flow for an alternative investment, and the tax benefits for investing in real estate, as people continue to learn about them, which I think they are. I think people are getting more educated at the benefits of investing in real estate. You're still going to continue to see very strong equity flow into this asset class.
And I think, with my international tinge, I also know that cap rates here in the United States on commercial assets are still a lot more attractive. Like even an office building in New York City at a 3 cap is probably more attractive than an office building in Hong Kong, right? You know what I mean? So you're having a lot of international money flooding into the country as well. And
I think we have the backstop of Fannie and Freddie, right? Who truly believe in affordable housing, and they're going to do everything in their power to continue the supply of affordable housing to the American people.
100%. Yeah. Okay, I want to transition as we come to the end of the show into your passion, which is helping to grow empowering females in an industry that is not as dominated by female entrepreneurs. So what are you doing in Hamilton Zanze with other young interns that were in your shoes many years ago? How are you empowering them to be more, to speak up, to take control, and to have a say in their career and how they, being that is so male dominated?
Yeah, so we a couple of years ago we started what's called the Wheel program. So many large companies have it, but we brought it to Hamilton and Zanze. It was spearheaded by Kurt and kind of the managing directors. Seeing since we all kind of went through it at Hamilton and Zanze, where we were spending time in all of these departments, and we saw the benefit of that. We thought, why not bring that program officially to Hamilton and Zanze? So we started the Wheel program, and we've dedicated one position a year to a female candidate to make sure that we're bringing in females to Hamilton and Zanze to teach them all the facets of real estate, right? Not pigeonholing them in marketing, right? Or IR, or what you would traditionally see as a female role in a real estate asset management or investment company, right? So they start off in acquisitions, learning how to underwrite, learning the pro forma, asking those questions. They move into asset management and working on, establishing the business plan and executing, and then onto finance, right? To understand Yardi and how taxes are being done for our investors. And then they get a little taste of legal, which is a little bit harder because, you probably need a law degree, but just to understand how, everything is pulled together in a transaction, right? There's securities issues, there's, figuring out our TIC agreement. So all of those things and just understanding the full picture. And then at the end, we come together and we say, hey, where did you feel the most excitement? What are you, do you want to go off and fly to another company and focus there, right? It's, but we want to give them the opportunity to learn as much as they can in a year-long period, because I think it's daunting to come into a real estate firm sometimes. And I think a lot of graduates are probably like, I don't know necessarily what I want to do, right? And we want to give them the opportunity to figure it out for themselves and be able to ask all those questions to every department that they can and learn. And so, we had our first candidate go through, and she's working with me in the closing group, right? And working on transactions and, doing that stuff. And COVID kind of put us back a year, but we're bringing it back right now and interviewing candidates to continue the program. And that's one thing we're doing. I'd say the other stuff is just the young females. We just want to encourage them to ask the questions, right? An open door, and don't feel intimidated if you want to learn. And if you're in investor relations and you want to learn about transactions, do it, right? Like, you're talking to our investors, you're at the front line. What can we do to help you learn that stuff? So that's really important for us, and how we're trying to foster this area of growth.
How are you seeing in terms of the percentage of candidates coming on your desk? What percentage are females, and how have you seen it transition, if at all, since you started?
So I would say it's probably by job right now, right? So I'd say in transactions, it's probably a lower percentage of candidates. I'd say in IR and marketing, even finance, it's probably about equal. Okay. Asset management is probably about equal too. Transactions is still probably a little more male dominated. But that's.
And have you seen that transition in the last 10 years since you've been with Hamilton Zanze? Like what rewind when you were an intern, you would have been 50-50 on the investor relations or the acquisition front.
It's transitioned. No. It's grown to that percentage through the years, right? I mean, even when I go to real estate conferences now, I used to be 1 in 10, right? One female to every 10 males. And I'd say we've grown that to 3 or 4 for females to every 10 males, which is, you see the growth. You're seeing it in the industry as a whole, right? But I still think that it's almost job specific, right? Sure. And transactions is still, I think, probably behind in the grand scheme of things, but we're working to improve that.
Well, I think it helps having a definitely self-aware leadership group that knows what it needs to provide in terms of, I think you said Wheel earlier, about the different, letting them taste a little bit of all the different aspects of the business to support a culture of asking the question, of being supported and not being judged and all that sort of stuff. And I think that starts from the top, and you can't have that organization change or an industry change without leaders like yourself doing the small stuff, right? And making it effective, because you won't then attract the grads. You won't then attract people to go into university saying, hey, I want a career in real estate finance or real estate acquisitions, because they don't see people like yourself leading the charge and flying that flag. So I think, so well done and good on Hamilton Zanze for leading the way, I guess, in a male-dominated industry.
I will say I've never felt like a female in a real estate market or job at Hamilton and Zanze, right? I think they've always treated me the same. And the best advice that Kurt, I say this all the time, that Kurt ever told me was, if you're interested, walk into the room, right? And I'm going to say the same thing to the people coming through our program. It doesn't matter your experience or who you are. If you're interested, walk into the room and ask the question.
Yeah, love it. Well, last question before we get into the top 5 investing tips is, where's Hamilton Zanze headed to? Where are you headed to in the next 5 to 10 years? And maybe it's too far out, but what's sort of your personal goals? And obviously it probably aligns with Hamilton Zanze, but where are you going? Yeah,
so we're continuing to buy, right? We want to deliver for our investors, so growing not only our private platform, but institutional DST. We are looking to launch our first fund, which we haven't done at Hamilton Zanze yet.
Interesting.
So that's a big goal for us this year. So those are big goals and a lot of work for us to continue along the way. But I think ultimately our principals are entrepreneurs. They want to buy more real estate, and we're trying to figure out the best way to do that for our investors.
Love it. Absolutely love it. And very interesting that you haven't actually, after all these years of operations, you've never had a fund.
Not a true fund. Yeah. We've done small private funds just to give some of our investors diversification, but sure. Majority of it is 1031 exchanges and tenancy and common structure. So this will be our first true venture into a big fund.
Awesome stuff. Well, look, as we come to the end of every show, we like to go into the top 5 investing tips. Ready to get into it?
Okay.
For question number 1, what is the number 1 daily habit you practice to keep on track towards your goals?
I work out every day. That gives me a little mental balance. And then I also try and spend time with my kids. So That's
Work-life balance is
work-life balance. Yeah.
Yeah. Love it. Question number 2, who's the most influential person in your career?
I'm going to give 2 people. I'm going to say my dad and Kurt Cooper.
Awesome. That's nice. Yeah. Awesome stuff. Mm-hmm. Question number 3, in the business, in maybe your day-to-day business, what is the most influential tool? And when I say tool, it could be a phone or a journal or something physical, or it could be software like Zoom or Slack. What's the most influential tool?
My trusty notepad. Has all my notes. So I try and write everything down so I don't forget something, or, that's most important to me.
Doing the same thing. Even on this show, I'm writing little things down so I can just the act of writing and then crossing it out. It's like a little reward. I love it. Question number 4. What has been the biggest, I say the word failure, I don't mean it as a failure, but a mistake that you've made in your career. And what did you learn from that mistake or failure?
Yeah, I think the biggest mistake is, not speaking up almost, right? So not saying, and it hasn't happened often, but I know after I leave a conversation, if I didn't say what I wanted to say and get my point across, I always feel a tinge of regret. And I may circle back and I may do it, but that I would say those are my biggest missteps. If I have an idea or if I have something to contribute, making sure that I get my opportunity to say it, and at the same time, give other people the opportunity to say things and truly listen. So I'd say that's always working on that. Love it.
And last question for you is, where can people reach you to continue the conversation? They want to be in your sphere. They want to find out a little bit more about what you do. Where do they go?
Yeah, go to hamiltonzanze.com. You can find me there. You can also find out more about the company. But please email me if anyone has any questions. I love to meet new people and find out what people are doing in the industry.
Awesome stuff. Well, look, Ashlee, I want to thank you so much for taking some time out of your day to jump on this show. I want to just reflect some of the things that I took away from today's show. I think the evolution of your career trajectory in a male-dominated world has been very, very impressive, and how you've come in and been able to hopefully help drive the company's culture in a way that is more allowing and open for people to, particularly females in this industry, to learn and grow, and the whole, if you're interested in something, walk into the room. I love that attitude. And then having someone in a position of power like yourself, being a CFO of a massive company, also helps be the poster child for that next person coming along, that next female entrepreneur who wants to get into these sort of roles in an industry, as I said, that is very much male dominated. And you can just look on this show. I've only interviewed a handful of women on the show. Not that I haven't tried, but it's just there's not as many. And so I think the whole championing of that is really, really awesome. And I just congratulate you for everything you've done. And then also the awesome growth of Hamilton Zanze. And you've been there every step of the way as they've gone from 7,000 units to 20,000 units. Did I leave anything out?
No, that was great. This was fun. Thank you so much for having me.
My pleasure.
Nice to meet you.
Yeah, lovely to meet you too. We'll have to keep in touch. But enjoy the rest of your week and we'll catch up very, very soon.
Take care. Thank you.
Well, there you have another cracking episode jam-packed with some incredible stuff from Ashlee. If you are interested in anything they're doing over there at Hamilton Zanze, please go over to hamiltonzanze.com. If you do like this show, the easiest way to give back is to give it a 5-star review on iTunes. And we're going to do it all again next week. So remember, be bold, be brave, and go good life.